January 30th, 2026. It's 4:59 p.m. In the Chicago headquarters of Metropolitan Capital Bank and Trust, the week is over. In exactly 60 seconds, these people are going home to their families, their dinners, their lives. They are logging out of their computers for the very last time. They just don't know it yet. 5 p.m. The clock strikes. But instead of the cleaning crew walking in, 3 men in dark suits step through the front doors. They aren't carrying briefcases, they're carrying federal orders. In an instant, the servers are cut, the website vanishes, the ATMs go dark. By 5:05 p.m., a single sheet of paper is taped to the front glass. It's the obituary of a financial institution. On it is the one word every depositor fears: receiver. This wasn't a heist, it was an execution. And today, we're going to look inside the dollar psychology of the first major bank collapse of 2026. We are going to see how $260 million was gambled away while the depositors were told everything was safe and sound. To understand the end, we have to go back to the beginning. Metropolitan Capital wasn't a bad bank on the surface. They were boutique. They served the elite. But in the world of money, the bigger the fish, the bigger the risk. By late 2025, the economy hit a wall. While other banks were playing it safe, Metropolitan was stuck with what we call zombie assets. These were long-term loans they made years ago that were now worth pennies on the dollar. In December 2025, the FDIC sent a warning shot. The bank's capital was impaired. In plain English, they were out of cash. But did they tell the public? No. They kept the lights on. They kept taking your deposits. They kept the illusion of safety alive for 30 more days. Why did they wait until January 30th at 5 p.m.? This is where the psychology comes in. The government calls it the weekend resolution. If they closed the bank on a Tuesday morning, it would cause a digital bank run. People would panic, withdraw billions from other banks, and the whole system would collapse by lunch. So they wait. They wait until you're at dinner. They wait until the markets are closed. They use the weekend to scrub the crime scene. While Chicago slept on Friday night, a secret deal was signed. Detroit-based First Independence Bank bought the remains for a fraction of the cost. By Saturday morning, your Metropolitan card didn't work. You were now a customer of a bank you never chose, in a city you don't even live in. We look at Silicon Valley Bank, we look at Republic First, and now we look at Metropolitan. The pattern is always the same. The experts tell you the system is resilient until the black SUVs pull up. So, how do you protect yourself? There are 3 rules in this new economy. 1. The Friday rule. If a bank has negative rumors on a Thursday, do not wait for the weekend. 2. The liquidity trap. Your bank balance isn't money, it's a claim on money. If the doors stay locked, that claim is worth 0. And 3. The 2026 shift. This is just the beginning. The shadow liquidity crisis is moving through the mid-sized banks like a ghost. Money is 10% math and 90% trust. And on January 30th, the trust ran out at 5 p.m. Protect your wealth. Understand the psychology. I'm the dollar psychology. Don't just save money, understand it.